What's up, guys? Excalibur here. Just want to make a video on the topic of fair value gaps. This is kind of a newer concept of me, but the way I personally use it is different than how a lot of people I see been using it. And I'm just going to show you the two techniques that are most likely the best way to use it and what to identify in the fair value gap. So a fair value gap is a price imbalance. So you have the stock market's either in balance or imbalance. So there's your price balance up here. Then you have your fair value gap right here between the previous candle lower wick and the previous the newest candle upper wick. So it's just going to be a gap of liquidity left during the move in price due to buying pressure and overlapping. So the main thing I try to tell people is right here is basically all selling pressure. There's no buyers. So on SPY, QQQ, the higher indexes, most of the time, those are going to be coming back into balance on volume. So, but right now, we like to mark this up, and we'll go through a few examples here in a minute. Like to mark these up. Usually the stock will like to come back and fill this at least 50% back in to make this candle more balanced. And it's when the stock market's in a balance, it's a lot better. You don't want extreme sell-offs. Eventually, every kind of sell-off or push we've had, we've covered. It's kind of just like gaps. The stock market doesn't like gaps, but the stock market doesn't like fair value gaps too. So just a recap: the fair value gap is going to be a price imbalance. So basically, in this you know area of this candle, it's all sellers, not 100% sellers, but a lot of selling pressure. And we'll show you how to chart these. Right here on SPY, I have one set up. Is where we have, we open, we have a nice push up, and then we kind of start rounding down. We have our previous high from day here, but we do also have, our structure right here. So we push down, we're kind of just making, we're kind of just like in this little box right here. This is what I look for in these fair value gaps, where you kind of want these kind of fake outs, kind of liquidity grabs, and then a huge sell off. You can tell going up, did we have a fair value gap? No. So going up, we weren't as strong. Going down, we had one here. You can tell we came back up, filled it up, went a little bit above it, probably into our supply zone, and then dropped. But that's, this is a good time to enter and then, start going down at the supply drop, at the supply. But the one I really want to show you that worked out right here was here to here. So we have, kind of a flat candle right here, a big drop, another big drop. So, this one didn't make a price imbalance because we pushed up and then dropped. This one was the strong sell off. You can tell we kind of rebounded. The next candle, we were able to come up to, I like to do right here. So this is what I do. I do the fibs. If you do the fibs, the 0, 1, 0.5, and then kind of shade it into whatever color you want. It kind of looks out a lot better than boxes because these actually show price. And I like having price there. But you can tell it almost comes up to that 0.5 and then continues to drop. If we drop it to a lower time frame, you can see how we had that big sell off. We kind of have that bounce and then we sell off again. So that's if you miss the first, if you miss this initial sell off. See, I'm not even looking at the right one. That's the problem right here. So we have that initial sell off, about 1140. You could tell how many times we hit this resistance and we finally broke above, kind of fake out, fake out. big drop, we slowly creep back into it, and this is where I like to take entrances right there, and then you have that second drop. So they refill, this candle right here is super selling pressure. They come back in, kind of fill it in with buyers, but you can tell that how fast we exited that fair value gap again, just because there's a lot of selling pressure. This is just marked as sellers are winning and probably will win if price comes back to that area. I like to do it kind of, you could look at 1 hours, but higher time frames are a little bit iffy because you have more of a bigger frame. Price is most likely going to return, going to retrace that area, but because it's like, $10. So what I really like is you kind of look for this lower time frame, and you look for just the look, kind of the big candle sell off right here. And so I draw from candle to candle, and when price is able to come back up in here, we didn't make it all the way up here. That means just selling pressure is very strong. So we were able to look how fast we dropped that. So that's one, really nice thing you can watch is if we're on a rally or a sell off, just mark up your little fair value gaps, and you can tell, we had one here, had one there, and had one here. Price, see how we flat and price came up to that little fair value gap barely and then dropped again. So that's just showing right here, almost came up to it again, dropped, but eventually pushed through. Buyers, the trend is up, so fair value gaps usually, this is kind of later in the day. I don't really like using it. I personally like to use it for entrances. If you miss that initial sell off, we come back up, you could get in again right here. Then we have an initial sell off. We could go through a couple more stocks on Friday because we had a nice sell off on Friday. But then we know we recovered. So we have try to find some. Here we didn't make it back into it. Here you can tell we had an initial drop. We tried recovering into it, but no, the sellers were definitely too strong. But right there, we came back into it, and you could have taken a little, a little scalp, minus 1.69% on a contract for a contract 0 day. That's pretty killer. But you could tell on the way down, we had fair value gaps, and then on the way up, we also made a few. So you can tell who's basically in control on this. I wouldn't personally go a higher time frame because this fair value gap right here is from 146 all the way down to 141. That's pretty big. Um, More times than not, the price could reverse there, and you could say, oh, it worked, but obviously from 146 to 145, the chances of price, kind of reversing there a little bit is pretty good. But what I like to do, see if I can find the example, another example is you have, try to find that big sell off. So we had that big sell off on Friday. Let's try to go find an earlier one. So I like to use like top 5 3 minute. I know people who use 1 minute, and it's pretty crazy. You have, kind of this little breaker structure. You're kind of having this little uptrend. We broke above it, and so, but we have a pretty nice sell off. So you're looking for that fair value gap right here. You can tell we get up to it, and once we get back down to it, we drop super, super hard. But that's just showing you selling pressure, and then they come and fill it volume, and then drop it again. Um, Most of the time that works out very well. You can tell huge push up, and then we started selling off again. Created a very value gap there. We came up. Don't be too overexcited about the 50%. Just notice, just say this is you know selling pressure. More times than not, we come up and either fill this in or get to it, get close to it, and then we drop. The best time to get into this is when we come out of it. Um, this one right here is probably a nice one on a kind of a tire-ish time frame. We had 5 minute. We barely made one there. We made a little one there. So, we had a lot of selling pressure coming down. So when we rebound a little bit, correct our RSI, whatever you want to say, kind of relief bounce, kind of end of day. We come back up, fill this up, and then continue to go down into the end, into the actual complete end of day. I wouldn't solely use this as just entrances. Like I said, I like to do it when we have those kind of fake breakouts, and then you have a huge sell-off and the price bounces up. The best time to get into a put is when the price bounces up a little bit, and then we continue to drop. Um, that's how I personally use it, and I use this along with supply and demand. So, more times than not, you have your supply and demand right here, and then this is your price balance, and then you're going to have your price imbalance usually after your supply and demand. So that helps with it because sometimes price doesn't get all the way back into your supply. It kind of hits, right under it, and that's where fair value gaps come in. Like I said, I wouldn't use it as a sole entrance or exit. I would, you know, just like an indicator, you kind of want to use it as confirmation or conviction to get into a trade. Especially if you miss that initial sell-off, you definitely want to wait for it to actually come back up. Let it recover, come back up, and then you can get your sell-off. Sometimes the first leg down is not the best one to grab. Not it's the riskiest. You wait for that second leg up, and this one is more, is less risky. Just to go over fair value gap is the imbalance of a candle, where you have basically one participant only, which is either going to be sellers or buyers. You can tell price will come back usually. Try to fill it in with the other participant, or it will show that the buying or the selling initially is too strong and will push the price straight back down. You got to remember the market's used on volume most of the time. Most of the time we're gonna fill in big push-ups. We're actually gonna fill back down. It's pretty much everything I have on fair value gaps. I personally like to use it, kind of at a high of day, the 3 hour or the 3 minute, 2 minute, 1 minute is kind of tough because you have a lot of them. There are indicators where you can um, have them drawn out for you, but like I said, if you go down to the 1 minute, you'll see them. If we have a rally, you'll see it in the 1 minute. They're everywhere. But hopefully this helps you guys understand a little bit. Definitely reach out to me if you have any more questions on this, and definitely start paper trading with this concept before you actually start trading, with real money. Just like as any indicator, any strategy, definitely want to back test it first. But thank you guys for listening and enjoy the rest of your day.